Morning, everybody, and you're very welcome to this morning's webinar. My name is Shay Phelan, and this is the second in a series of webinars that Teagasc are hosting as part of Teagasc Tillage Month. For any of you that were on here last week, you'll have seen the first part of the series, which was our first edition of our National Tillage Conference. And last week we looked at the implications of price hike on fertiliser advice that we normally give and how that has altered to take into account the cost of fertiliser for the coming season. So on this morning's webinar, we're going to take that on a step further, and we're going to look at the implications of those fertiliser price hikes from a farmer's perspective and look at some of the practical issues farmers are going to likely experience over the coming weeks and months. So as always, we would like you to get involved in these webinars. After each presentation, we will have a Q&A session with the panelists, and we'd ask you to submit your questions, whether it's on Zoom or on YouTube, to our panelists, and we'll do our best to answer as many of those questions as we possibly can in the time we have allotted. We hope to be finished by about 12:30. So on this week's webinar, we have three presentations as usual. We have James MacDonald, who's our tillage our financial specialist, and earlier in the week, James caught up with Liam Phelan from AIB and with John Carroll from Glanbia to talk about how farmers might finance their crops this season, and it makes for a very, very interesting discussion. I'm also delighted to say we have Don Summers, and Don is one of our tillage signpost farmers, and Don is based down in Oilgate in County Wexford. And both Don and his advisor, John Pettit, have put together a very detailed plan about how they might address the challenges that are going to face farmers this year on their farm, given the price hikes that have occurred, on not only just on fertiliser, but other costs as well. And again, that makes for a very interesting discussion. But first, I'm delighted to say we have Dr. Pete Berry on board today. And Pete is the head of crops physiology in ADAS in the UK. And recently, ADAS have carried out a detailed review of crop biostimulants. And Pete is going to have a look at the findings of that review and give us pointers about, how these products worked and the efficacy of the different products that are available on the market today.
Okay, thank you very much. My name's Pete Berry, and I'm going to give a brief summary of a review we did for AHDB a few years ago about the function and efficacy of biostimulants. And where we have any extra information available since we did that review, I'll summarise that as well. So let's start with the definition. What are biostimulants? Well, they are a material containing substances or microorganisms that stimulate the following natural processes to enhance either nutrient uptake, nutrient use efficiency, tolerance to abiotic stresses, so that's things like drought, heat, cold, improvements in crop quality, and they can have activity against pests or diseases, but it has to be through things like induced resistance or providing a physical barrier or antimicrobial action. And the result of these things will be to either increase crop growth or yield. And it's important to recognize that the main role of a biostimulant should not be as a fertilizer or a pesticide. It has to be through these mechanisms which I've just described. So there are a significant number of product types of biostimulants, and this is by no means an exhaustive list, but it's the product types which we reviewed in the AHDB review. And you can broadly categorize the product types into two groups, the non-microbials and the microbial types. In red there, I've highlighted a few that you or many of you will be familiar with, such as seaweed extracts, humic substances, phosphites, protein hydrolysates with free amino acids, and plant growth promoting bacteria. So there's some of the more commonly used ones, but as I say, the number of product types is quite substantial. So what level of evidence did we find for biostimulants to improve productivity in cereals and oilseed rape crops? Well, we reviewed the scientific peer-reviewed literature which was publicly available. We reviewed reports, we asked the industry for data, which we analysed and reviewed. And what we found was that the majority of the evidence was actually from glasshouse studies or from non-UK field conditions. We did find field experiment evidence on seaweed extracts, phosphites, antitranspirants, and mycorrhizal fungi. And when we reviewed everything, including all types of experiments, including glasshouse experiments, we found that of the 11 product types we reviewed, there was evidence that 9 of them could improve yield. And most of the evidence we reviewed was for cereals, rather little experiments for oilseed rape. Many had a role against pathogens and pests. Generally, the modes of action, or how they actually worked, wasn't that well understood. And importantly, we found a general lack of consistency of the results under field conditions. So let's now focus on what field evidence we did find, and these are primarily from the UK. We found that for seaweed extracts, 1 out of the 3 experiments showed an increase in below ground biomass. For phosphites, we found that 4 out of 15 field trials showed a positive effect on yield. For antitranspirants, we found that 7 out of 7 of the field experiments on these showed a yield increase, and that was in drought conditions. For the experiments done under well water conditions, antitranspirants actually cause a negative effect on yield. And we found 2 field experiments looking at mycorrhizal fungi, but showed no effect on yield. For the rest of the product types, we didn't find any UK field evidence. But since then, we have done some other experiments, such as on amino acids. We've carried out 10 field experiments on amino acids. And in those, we found that in 9 of the experiments, there was no effect or no statistically significant effect on yield. In 1 experiment, we found that the spring application actually significantly increased yield. The spring plus autumn application actually reduced yield. So a mixed result from that experiment. Let's focus on one of the product types which you might be interested in, the phosphites. So what are they? They're a reduced form of phosphate with the chemical formula H2PO2. Any effects from phosphites are due to biostimulant or pest control activity. They're not a fertiliser. We did find evidence that they could have negative effects on growth if the plant phosphate level is low or it's used at high rates. We found evidence that it can be used to reduce diseases such as mildew and reduce nematode activity. And overall, we found 19 experiments investigating phosphites, 2 of which were in the glasshouse. The rest were in the field, either UK or Ireland. And we found that 3 studies investigated whether they could improve above ground biomass, and 2 showed that they could. There were 3 out of 3 studies that measured below ground biomass showed that they could increase below ground biomass, and 4 out of the 15 studies showed that they could increase yield, with yield increases of up to 6%. With the high fertiliser prices, naturally we're all interested in trying to find products which can improve nitrogen use efficiency, and so we did review whether there are product types which can help to improve nutrient use efficiency, and 2 come up as having potential, or the greatest potential for doing this, these being the humic substances and the plant growth promoting bacteria. So starting with the humic substances, what are they? Well, they're products of natural decomposition of plants and microbes. We did find evidence from growth chamber experiments showing greater nutrient uptake, which was possibly related to better root growth. We did also find evidence that at high doses they can reduce plant growth, but we didn't find any evidence that they can reduce the fertilizer requirements in the field. And that was because we couldn't find any papers or reports which have done the right experiment to test that question. So the other product type which has got the best evidence for improving nutrient use efficiency are plant growth promoting bacteria. There's lots of different species of this, including free living nitrogen fixing bacteria and symbiotic rhizobacteria like rhizobium. There's evidence for greater uptake of nitrogen, phosphorus and potassium from mainly glasshouse experiments, and that was due mainly to nitrogen fixation or making the nutrients more soluble in the soil. But again, no evidence that they can reduce fertilizer requirements in the field, and that was due to the absence of the appropriate experiments having been done to test that question. So the conclusions so far are that the evidence is mainly from controlled environment and other agroclimatic regions compared to the UK and Ireland, but it is that biostimulants could be beneficial for crops, but we need much more field evidence which can demonstrate effects on yield and the economic effects. We can't find any evidence that biostimulants can reduce the crop requirement for applied fertilizer, but again, that's because we can't find any evidence of the right experiment have been done to test that question. We need a better understanding of the key timings, rates, and crop interactions. For the biostimulants which show the most positive benefits, we need to work out how to integrate those into conventional crop management. And finally, if you're thinking of using a biostimulant but you can't find much evidence about how well it works, then we really recommend you test it first. And some hints and tips for how best to do this are really start by choosing an even field so you can get as fair a comparison as possible. Don't try and test too many things in one field, just test one product ideally. And if you can replicate that test, say 3 times, so with 3 tram lines of that test product in a field like the one illustrated there, where the red tram lines show where the test product is being tested, that's best. You need to be able to record the yield, of course, either using a calibrated yield monitor on the combine or over a weighbridge. And with a good experiment which has got replicated tram lines, then you might detect yield differences of between ½ a ton and 1 ton per hectare. Of course, if you use the weighbridge approach, you also need to accurately measure the test strip area. If you have got a combine with yield mapping capability, then you can do a more detailed analysis of the results by comparing all the individual data points, yield data points. And with this, you can actually detect smaller yield differences of between 0.3 and 0.5 tons per hectare. And we run a service called the agronomic service, which analyzes that sort of yield map data. And finally, we've done a little guide to help farmers to set up their own crop trials, which can be found at that website there. So thank you for listening, and I welcome any questions.
Okay, thanks, Pete, for that. It's a quick review into a very detailed paper. I know there's a lot more information in the background that we could bring to the fore today, but we probably just won't have time. We're also joined, as people can see, that by Mark Plunkett as well. Mark is our resident in-house soil specialist as well. So, Pete, if I could just start with you first of all in terms of questions. I know you mentioned there's limited data, I'd say, from the UK and Ireland. Does it really make that much difference if experiments are carried out, say, in other countries like Mediterranean countries, or does it really need to be carried out in local conditions?
Yeah, I think it does make a difference, particularly if the environment is very different. You know, especially, for example, if the crops are grown in a drought-stressed environment, then I think we can expect different results from biostimulants compared with our environment where we're less commonly drought stressed. So it is important.
Yeah, I suppose, and the point you make about drought is quite pertinent, because I know in the last couple of years, certain parts of the country would have experienced drought. And in a drought sort of situation, what do you think are the best products to alleviate that drought stress and maybe help uptake the likes of P and
Yeah,
nitrogen?
yeah. I mean, the evidence for tolerating drought stress, the best product was anti-transparents, but they do need to be targeted at exactly the right growth stage to have a benefit, and they do need to be used in drought conditions. So targeting it at booting stage on wheat was where they have the most benefits. They can actually be negative if you use them in droughty conditions. Other than that, there's not that much evidence for the different biostimulant product types helping with drought stress.
Mark, just quickly turn to you then. And this question starting to roll in here now fairly quickly. From the timing point of view, what do you think is the best time to apply biostimulants if guys are going to do it?
I think early in the development of the crop. I know it's very, very important to know the mode of action and how they work as well. But I'd imagine when the crop is laying down, when it's rooting, tillering, when you're, I suppose, building yield potential shape, I would think, that would be possibly one of the best times if there is a stress or a pressure there coming on, that, when the crop is forming yield, or, I think would be, unless Pete has something else to add on it, but I think that would be the most important time, Shay.
Yeah, and sorry, Pete, go ahead. Yeah.
No, I was just agreeing. Just before the sort of stress comes on, then that's likely to be the best time. Yeah.
Yeah, and just in terms of maybe to both of you, is there any evidence or any comments on there about nitrogen efficiency? I know, Pete, you said it's very limited, but are there any products out there that you think might have an impact on nitrogen use efficiency?
Yeah, it is limited. Like I said, I mean, the humic substances and the plant growth promoting bacteria are of the greatest evidence, but still lacking some field evidence. We've seen a bit of recent evidence of a seaweed extract actually possibly helping with nitrogen use efficiency. So there is some new, evidence coming on stream, as all the time. So it's something we need more field evidence of, and the right experiment needs to be done where you've got high or normal and low nitrogen fertilizer applications with and without the biostimulant, so we can see whether it works in the field.
Yeah, and just as soon as you mentioned seaweed extracts, I have a question here from Hilda, Pete, about and I know we talked about it earlier on, about the experiments that were done through Brandon Bioscience down in Tralee. There's a paper there published on those. You're familiar with that paper, I think, aren't you?
Yeah, that's right. Yeah, and it looks very interesting and very promising. It's got the right sort of experiments in the field. Looks promising. And I should emphasize that we, in the UK, we were reviewing all the UK stuff as much as possible. So this one, it only came out last year, didn't it? So it's not received as much attention yet.
Yeah, and there seems to be a trend going here on seaweed extracts at the moment. There's another question here about the possible difference between the sources and their effectiveness in increasing biomass. And you mentioned about biomass, I think, earlier on, Pete. There, some of them are giving responses with biomass. You might comment on that.
Yeah, I mean, it's quite a lot of the experiments we see yield isn't measured, but the biomass is, and it might be biomass measured, in early growth stages. So it's not necessarily telling us it's going to increase yield, but it's indicative that it's having effects on crop growth, and it's showing signs that it could therefore be useful on yield. So that's the reason why there's all this information on the crop biomass and below ground biomass as well, because they're sort of early indicators which are often carried out in controlled environment studies.
Yeah, I see just some people are coming in here with other trials that have been done. That I see there was work done in UCD. I'm not sure whether you're familiar with that work, Pete, and it shows kind of quite significant increases here of up to 0.79 tons per hectare. Are you seeing anything? I know some of the products you've trialed did show 6% increases, and we're not saying these products don't work. We just need to distill down which ones work best, I presume, in certain circumstances.
Absolutely, and we haven't looked at everything, and we haven't been able to review everything. There's so many product types out there that there's undoubtedly others we want to test. So I'll be very interested to see the data that's mentioned there. We can add that to our review.
Yeah, so if people have experiments out there, and I know there are plenty of people from the industry on the call this morning, if they have evidence or if they have carried out their own trial work or field work, they can contact you and
absolutely
try and get that included in the review.
We'd be interested to see that. Yeah.
Mark, just Pete mentioned earlier on about carrying out field experiments, and I think we're encouraging farmers, if they are going to use products, to try their own trials as well. Have you any guidelines or comments for farmers if they're going to carry out their own in-field trials?
Yes, well, it's a good point, Shay. Like as Pete was making that point as well, like that even to leave a tramline or leave a number of tramlines untreated, have with and without. So again, if you have something like a yield monitor on your combine, you can pick it up at harvest time, and that will tell you pretty quickly. But yes, it is nice to have a with and without, so you can see what the product is actually doing in your crop. Yeah. Absolutely.
We're trying to, and just for the people that are on the call here, we are trying to answer some of the questions in the background as well. There's a whole heap of questions, Pete, coming in about different products. I'm not sure whether you're going to be able to answer details about our work on the different products. I have one here on a product called FRAS, FRASS. I'm not sure if you've ever come across it.
I must admit, I'm not familiar with that particular product, but we could try and answer some of these questions, after the webinar as well, and try and get some answers back to you.
Yeah, so I'll look at. Like I said, there's probably a lot of product questions coming in, which I suppose is not fair to ask you to answer live on the hoof. Is there a possible? There's one question here. Is there a possible build-up of a response over a number of growing seasons? So, if you're applying different products over a period of time, I'm talking years, can there be a cumulative effect, do you think, over a period of time?
It will depend on the product. I'm not sure. Let me have a think about that and see if I can get you a good answer into the Q&A on that one.
Yeah, I suppose a very pointed question here, Pete, coming into you. If you were using biostimulants on your own crop, what products would you use? And I'm not sure whether you want to give a glowing reference to any product or anything like that.
I wouldn't rule them out, but if I had my own farm, I would test a few and see which ones worked on my crops and my fields. Because all farms and fields have got different stressors. So it's undoubtedly that different products are going to work best on different farms. So I'll do a few tests and work one out, but I'd keep an open mind certainly to see if one could be found that worked for me.
Would it be fair to say, Pete, that every field is practically different? So from what you're saying there, that you need to trial out different products in different fields, that because of, I suppose, the lack of information in one sense, that there needs to be a lot more work done in different scenarios, in different fields, different situations, different stresses. And it's not until we get that sort of information that we can really find out. You're pointing out there's a lot of gaps in the knowledge. Yeah. That until we get more data together on different scenarios, that we can actually make more concrete recommendations on products.
That is important, and it's also important to figure out all the mechanisms as well. There's lots of good work being done to understand the mechanisms, but we need more, and that will help us to target the products at exactly the right growth stage and the right conditions that the crop's in or the soil's in. So targeting is vital.
Yeah, and I suppose one final question, Pete, I'm going to move on here because we could literally be here all day, the number of questions that are coming in at us. Will organic matter and a good rotation help or neutralize the effect of biostimulants, do you think?
Well, again, it will depend on the product. If you might argue that, if you've got the high organic matter content or you're applying lots of manure, then you might have enough humic substances already in the system. But for other biostimulants, then it won't make much difference whether or not it's got a high or a low organic matter content. So again, it'll be product specific.
Okay, look, guys, I suppose we're going to have to leave it at that. Like I say, we could take a lot more time with these, but I suppose the key message for farmers out there is they really should be trying their own. If they're not sure of products, they should be trying their own trials as well on their own farms in their own scenarios and see how they work out for them, and try different products and have parts of field with nothing on them as well. So listen, thanks, Pete. Thanks, Mark. We'll come back
Mark.
to you again, please God, at the end of the session if there's more questions to answer. So next we're going to move on, folks, to Don Summers and John Pettit, and the guys are going to give an insight as to what Don is going to do on his farm to mitigate against the fertilizer price increase this season.
I'm taking a number of steps on my farm this year to try combat extremely high fertilizer prices. I will not just be trying to reduce the total amount of fertilizer I will apply, I will also be trying to maximise how efficiently I use any applied fertilizer. The first step I'm taking will be to soil sample the entire farm. The area and location of each soil sample will be decided based on 3 years of yield maps from the combine. The average area size is approximately 2 hectares, and we hope to use this to identify any problems in the soil. Lime will be applied to all areas as required, and this will again maximise how efficiently any available nutrients are used. When we have the soil sample results, we will make prescription maps so that the fertilizer can be applied as accurately as possible using GPS. The next step I will be taking is to adjust the compound rate applied to my crops. I have been building P&K levels for a number of years now, so this year I will be able to reduce the amount of P&K applied on my farm. In sites where I have a high index 4, I will apply no P. Where I have a high index 3, I will apply 75% of offtake. In a low index 3 to a high index 2, I will match offtake, and in a site where I am index 1, I will apply slightly excess P, but a lot less than I have been doing in previous years. Based on previous soil tests, I expect to save about 62 kilograms to the hectare of compound. This represents a saving of approximately 47 euros a hectare, or a total of 3,660 euros on my farm. I will be careful to apply sufficient potash, as potash has not risen in price as much relative to nitrogen and phosphorus, and I want to make sure I apply sufficient potash to make sure I get a good use of any nitrogen that's applied. In my spring cereal crops, I will apply some chemical fertilizer, as I want to ensure it gets a good start, which is very important in spring cereals. I will place 125 kilograms to the hectare of 10-10-20 with the drill. This way I will get the most efficient use of this fertilizer. I will use layers manure at a rate of 5 tonnes to the hectare on all spring cereal ground. This will supply the remainder of required P and K and a large portion of the nitrogen required. The layers manure has a nutrient value of 69 euros a tonne and a cost of 15 euros a tonne. This represents a saving of 270 euros a hectare, or a total of 5,400 euros on my entire spring area. The next step I'm taking is to change the type of nitrogen I will use on my farm. This year I will be using protected urea on all winter crops, and I will be using Sulcan on my spring crops. The protected urea is 40% nitrogen and 6% sulfur, and this represents a saving of 27 cents per kilogram of nitrogen over using Sulcan. On my spring crops, I will still use Sulcan because I grow spring malting barley, and I think the Sulcan will give me more predictable protein levels in my spring malting barley. I will use protected urea on all my winter crops. I am using this because I am on 24 metre tram lines. I have a modern spreader, and I will do plenty of tray tests to ensure I get a good, accurate spread pattern. By using protected urea on my winter barley, winter wheat and winter rye, I will make a saving of 39 euros per hectare over using Sulcan. By using protected urea on my oilseed rape crop, I will make a saving of 33 euros per hectare, and the total saving on my farm from using protected urea will be 2,900 euros. All land to be sown in the spring was cover cropped last autumn. This yielded up to 2 tonnes per hectare of dry matter and uptook 60 kilograms of nitrogen per hectare. I hope some of this nitrogen will be available to the spring sown crop, but I do think it will be available later in the growing season. For this reason, I will reduce the total N applied to my spring cereals by 10 kilograms per hectare. Having looked at the break-even ratio for grain price to nitrogen price, I will be reducing the total amount of N applied to all my crops. On my spring barley, I will apply 125 kilograms to the hectare of nitrogen. On my winter wheat, which is in an index 2 for nitrogen because it's following a break crop, I will be applying 190 kilograms to the hectare of nitrogen. My winter barley is on an index 1 for nitrogen, so I will also be applying 190 kilograms to the hectare of nitrogen. The final step I will be taking is using variable rate application nitrogen on my farm. I have 3 years of yield map data from my combine, and I will use this to decide yield potential. If an area hasn't yielded in the past 3 years and hasn't a fixable problem like drainage or compaction, why apply excess nitrogen to this area? Excess nitrogen will be unused and lost to the atmosphere or to groundwater. By using yield maps and prescription maps for application, I will apply lower rates of nitrogen to areas that don't have yield potential and higher rates of nitrogen to areas that have historically yielded well. On my oilseed rape crop, I will take GAIs at various different locations in the crop. These GAIs will be linked to GPS in the field, and then when I spread my nitrogen, I will be able to vary the rate according to the different GAIs in different parts of the field.
Don has outlined the measures that he plans to take to address the current price of artificial fertiliser. The first step in the process should involve taking soil samples to establish current soil pH, phosphorus and potassium status. Where the pH needs to be adjusted, either calcium or magnesium lime should be applied to adjust the pH to the optimum range to ensure optimum nutrient availability. Where individuals have been building both soil phosphorus and potassium levels, an up-to-date set of soil samples will establish the current soil potassium and phosphorus level. Where soil levels have risen, individuals will be able to apply less phosphorus and potassium and avail of savings. Where individuals have been building both phosphorus and potassium in recent years, in light of current fertiliser prices, it will be best advised to at least maintain phosphorus and potassium levels or build them to a small degree on lower indexes. It may also be worth noting that potassium is directly linked to the efficiency of use of nitrogen. Considering this and the fact that it's the cheapest element within a compound fertiliser, it should not be used sparingly. Other important factors to consider will include the use of protected urea to avail of potential savings with a cheaper nitrogen source, the placement of compound fertiliser, which will mean that phosphorus will be used more efficiently, particularly on lower indexes, index 1 and 2. Consideration should be given to the BER or break-even ratio and the relationship between fertiliser price and grain price. And finally, the use of organic manures to replace artificial fertiliser.
Okay, thanks lads. Thanks Don, thanks John for that. It's a good insight into your farm, and I just want to say thanks Don for putting your hand up to be one of the signpost farmers this year, and I presume I hope over the next couple of years people will get to see plenty of you and plenty of what you're doing down there, and it's all good. Quick question for you, Don, I suppose, to start off with here in terms of sorry, I've lost the question here now. You're using organic manures down there, Don. Had you much trouble getting them and using them and sourcing them?
Yeah, the biggest problem with organic fertilizers or organic manures was finding a reliable source. It took time. It took probably a year of making phone calls and asking farmers and asking producers if they had any. I suppose chicken or poultry manure was probably the most readily available in my area. The likes of farmyard manure I thought would be easily sourced, but I approached a number of farmers who buy straw off me, and initially very few were interested in swapping straw for dung, which was my preferred way to do it because at least I knew what I was getting back in. So I wasn't worried about any weeds that may potentially have come from a different farm. I knew it was my straw, so that was my preferred choice, and that took a while before I could convince a few farmers to do that. And then I also tried to source spent mushroom compost, which has so far proved impossible to get in my area. I understand some farmers can get it in their area, but so far I haven't found any. The next biggest problem is probably the workload. It does add extra work at maybe a busy time, like after harvest. Say if we harvest and we want to apply an organic fertiliser and incorporate it with a cover crop, but I'm lucky that I share the workload by working in cooperation with my uncle, so we can kind of work together to do that. Another way I tried to control the workload was to buy my own spreader, which initially seemed like it's going to add additional work. But if I was to depend on a contractor, I'm depending on when it suits them to spread, whereas with my own spreader, I can spread as little or as much as I want, and I can spread it when I want. So if I finish cutting the field and I've no cutting for a couple of days, I can apply it right then when it suits me and do as much or as little as I want. The other potential issue is probably making sure it's spread accurately. And to overcome this, the best thing to do is to, as where possible, get the organic fertilizers tested to see what nutrients you have in them. And the next thing then, I suppose, is to be as accurate as possible in the spread pattern. I found that the likes of farmyard manure has a much wider spread pattern than the likes of chicken litter. So you have to examine it on the ground. Now this year we're hoping to do tray tests to be as accurate as possible with the spread pattern. The other thing I've done this year is I fitted a weighing system to the loader. So again, it can be very inconsistent in the weights in different fertilizers, whether it's farmyard manure or dairy sludge or chicken litter. So I'll be weighing each load, and the area spread will be mapped on GPS to try to be as accurate as possible with those nodes.
Yeah, and seeing as you mentioned GPS, Don, you were saying there earlier on that you have full capability now and yield maps and all that, so you can variable rate apply product if you need to. And you were mentioned there where there's low yielding or low potential parts of fields, you can cut back on fertilizer in those parts rather than just giving a blanket treatment.
Yeah, now we can only do the variable rate with the bagged or chemical fertilizer. I don't have the ability to do variable rate on the organic fertilizer, but I got an auto steer system with the capability of doing yield mapping through TAMS. So once I kind of had that, I felt I should try use it as much as possible. So we connected it to the yield monitor on the combine, and I've been mapping for 3 years. And now we are looking at where we sample based on yield potential, or maybe looking at, say, the offtake based on yield. So we're varying what we put out according to how it can be used. And if an area in the field hasn't historically yielded, I don't see much point in applying excess nitrogen in the year when it's so expensive.
Yeah, and possibly lodge crops as well or something like that, or not use it properly. John, I just want to move over to you then in terms of, I mean, we saw a picture of you there doing soil tests, and it might seem a very basic thing to do and do soil tests, and you've worked on the soil analysis that you have seen in those soil tests. So what degree did Don over the last couple of years change or increase his P and K level, and what did it cost them, I suppose, over that period of time? Have you a figure on that?
It was supposed, Shay, like in the last set of results showed an increase in pH of 6.1 to 6.6. So there was a very significant increase in pH. And that's reflective of the fact that Don has spread a huge quantity of lime during the intervening period as well. If I look at the average P level across the farm, like has increased from 3.6 to 5.1. And this is as a result of two things. One, the increase in pH will be in part responsible for it, but also the fact over the same period, he would have applied something in the region of about 35 kilograms of P over and above offtake per hectare. Again, K, we've seen increases in K levels or potash as well. So K has risen on average over the farm from 96 milligrams per litre or a high index 2 to 126 milligrams per litre, which should be a mid-index 3. And again, looking at figures in discussion with Don, would probably apply something in the region of about 30 kilograms of excess K over and above offtake to achieve the same increase in K level overall.
So again, if you're to look at, suppose the P and K applied, what's cost on over that period, it's cost them probably about €106 per hectare or €43 per hectare per year, right? So, and this same spend is enabled Don to maximize crop yield potential, but it's also enabled them to realise savings in the current year.
So,
so
it's
again,
money in the bank as such.
Exactly, Shay. And I suppose to put the thing in context as well, the €43 that he spent per hectare or per year over that period, right? To put that spend in context, this year, if you deploy 125 kilograms of 10-10-20 per hectare or 1 bag per acre, it's going to cost you €94 per hectare. So, like the cost of Don building his P's and K's realistically hasn't been that significant. So I think the main message from it is that money invested in increasing soil P's and K's is money well spent.
Yeah, Mark, and just quickly to turn to you before we move on. Don has catch crops grown on the farm this year, and I know you've gone around and measured a good few catch crops this year. What contribution do you think or savings can farmers look for in those?
Yeah, I think of all the years, Shay, there's good covers out there. The back end, the autumn was very mild, soil temperature high. And yes, we did, myself and John and Don measured, Don had Facilia and Rye there, and we were getting anywhere from 30 to 60 kilos of nitrogen taken up in those covers. And I suppose one of the interesting facts as well, anywhere where that Don had chopped straw, there was half the chopped straw seemed to be mopping up sort of 25-30 kilos of nitrogen as well. So it's either in the cover crop or in the cover crop and the chopped straw, if you know what I mean. But in terms of, I suppose, making an adjustment to the crop in the current year, I was speaking to Richie Hackett, and Richie was saying somewhere between 0 and 40% of the nitrogen available. It very much depends on the year, but we were sort of guesstimating somewhere around maybe 20%, you know, depending on how things go, Shay. So like some of Don's crops was taking up 60 kilos of nitrogen we measured in the above ground biomass, and 20% of that has about 10-12 kilos. So that's the type of an adjustment that you could potentially make depending on how the year goes. Like,
so there are potential savings there for farmers if they have good catch.
There is.
Yeah,
there is.
Of course.
Yeah.
Listen, guys, thanks for that. We'll come back to you again after the final session. So I just want to move on to the final session. And like I said earlier on, James MacDonald, our financial specialist, caught up with John Carroll from Glanbia and Liam Phelan from AIB, just to talk about the credit issue that's coming and facing farmers at the moment. So over to you, lads.
Good afternoon, everyone. I've been asked and in this webinar for my thoughts in relation to how growers can work through the 2023 season, given the cost of inputs, I suppose mostly fertiliser, have increased significantly since this time last year. I also have here with me John Carroll from Glanbia and Liam Phelan from AIB to answer a couple of questions and maybe to try and steer you through the 2022 growing season. I suppose in general, when trying to be efficient, we look at the higher output while trying to watch costs. Given that input prices have gone up significantly and the law of diminishing returns that Richie talked about on the webinar already, that has shifted. So the agronomy of crops really for 2022 needs to be carefully planned. I'm told the break-even point has changed. Like last year, 3.5 kilos of grain paid for a kilo of nitrogen. That figure is now closer to 12 kilos of grain. So chasing a bumper yield in 2022 could be quite costly. So if we don't pay attention here, there's a danger that we might overspend to protect our investment. And if we do that, we'll erode the profitability of the crop. Those of you that have winter crops in the ground, and I believe plantings are up a good bit on the previous year, you're really limited in what you can do. So it's important to get your plan for the remainder of the growing season correct. So where land is still fallow, you probably have more options available. And maybe these are options maybe that you haven't tried before, and they can reduce the risk to your farm. Maybe you might import some slurry to reduce reliance on chemical N. Try maybe improving the pH as lime releases some of the more expensive nutrients. Maybe grow a protein crop, as Dermot alluded to, creating a more sustainable rotation. Maybe matching the crop to the soil pH so you can mine some of the minerals and inputs that are there. Maybe you might grow a crop on contract so somebody else is covering the cost. Or another option might be to forward sell some grain to your merchant to cover some of the inputs, using cover crops to capture in for the 2024 season, as there's really no guarantee that input prices will go back to where they were, that normal figure. I reckon there'll probably be a new normal across all input prices as inflation has grown too. So I suppose to move on, the cost of inputs is one thing, the availability is another. So now I'm going to just throw a couple of questions to John from Glanbia. I suppose, John, could you talk to us about maybe price, where you see it going now and in the near future? How availability, what products are available and how available they are? And maybe in relation to credit, you don't just have tillage farmers as customers. Credit will be in greater demand, and can you provide similar amounts of credit or more credit than you have in the past, or will farmers have to split the credit between yourselves and the banks? So just some comments in relation to that, John.
Thank you, James, for that. So I'm going to talk about the markets first. I would expect by now that all farmers are aware of where prices pertain in the market. And it's still very difficult to predict how close we are to that peak in prices. Urea the markets have come off the top in recent days, but nitrogen prices have moved on again since Christmas. The big thing here, James, is that there continues to be a global scarcity of fertiliser. Coupled with this, then, major producing countries continue to protect their domestic markets from high prices and lack of availability. And at present, there are export bans and quotas in place in Russia, China, Turkey, and Egypt. They're all having effects on the market. The European gas situation continues to be very difficult. Europe's gas prices remain very high, as you probably all know, and gas futures for April have doubled in the last few weeks. High gas prices means high nitrogen prices. Otherwise, production will close again. Meantime, regarding potash, the Belarusian sanctions continue to be increased in severity, and they are now having a significant effect on potash imports into Europe, a concern for the NPK compounds for tillage. Fertiliser imports into Ireland are already significantly behind previous years at this time. European fertiliser production is also significantly behind, mainly because of production shutdowns and reduced throughput because of the European gas price hikes last autumn. At present in Ireland, most products are available, and we are asking farmers to come talk to us while there is availability and while we can get product to farm. But the very big concern is that when significant demand comes on in March and April period, product will not be available. Supply right across Europe is well behind previous years, and the real concern is that fertiliser will not be available for importing into Ireland when the big demand comes for fertiliser across the spring. Producers will want to supply their own markets at that time ahead of moving product by ship to Ireland. If this happens, it will cause serious delays on product availability at the peak demand time.
Yeah. Would you be expecting, John, when people are doing deals with you, that they might guarantee a certain amount of grain or fix a price with them now for the future to cover some of the inputs as a merchant?
Yeah, James. So what we're saying to all our customers is come talk to us, and we will deal with them on an individual basis. But yes, there is much more requirement for credit. So that requirement must be either partly filled by the farmer or fully filled by us. So we need to know what the requirement is by the customer. So what we ask is that all our customers come talk to our business managers and our agronomists and plan a course of action for the spring, and we'll try and help them through that.
Yeah, a figure that myself and Shay came up with the other day is for a farmer with 100 hectares, so 250 acres, they may need an extra 40 grand,
Yes.
in terms of the spend and input. So it's a nice bit of money to come up with, like, so
And we're aware of that, and we're trying to build it into our own figures here in Glanbia, so that we can discuss with farmers individually. But certainly, you're right. They can. We have the facility whereby they can forward sell some grain if they wish, and sometimes it's the prudent thing to do. Sometimes it may not be. But you know, as I say, James, we need those farmers to come talk to us.
Yeah, and in relation to booking fertiliser and lorry loads of products now, John, should we be talking early to you, or?
Yes, we need to know, because we need to cover them. The big thing here is that, you know, in case of scarcity, one thing is the price, but the other is having the product. So what we'd like to do is have those farmers come to us, discuss that with us, so that we can put aside fertilizer. We can organize that for them. And what we would be saying to farmers, we'd like them to start taking fertilizer onto farm fairly soon.
Yeah.
While we can get product.
Yeah. Okay. That's great, John. I'm now going to ask Liam from AIB to comment, I suppose, on the availability of credit. Maybe are there new products? What products do you have? Unsecured, I suppose there's always been around, you know, a 60k figure. Has that changed, or are there other products? How will, say, people that may have normally dealt with their merchant for credit and are now coming to you for the first time, how did they prepare for the meeting, Liam, and what did they need to do? So you heard my figure of 40k extra for a 250-acre farm. So, you know, how do you see it playing out?
Yeah, thanks, James. I suppose, first of all, just to give a small bit of a context here, your figure of 160 euros an acre on 250 acres or 100 hectares costing an extra 40,000 is fairly real. And that's going to be either financed by the farmers themselves, by their merchant or their suppliers, or by their bank, or a combination of all three. But as a way of context, many tillage farmers are coming into the year very strong. They're coming off the back of a very good harvest where yields are good, prices were good. Teagasc's figures are saying that incomes are actually up 44% versus the previous year. We're looking at forward prices. I know that you alluded to them there earlier. Forward prices are actually very strong. They're akin to what they were this year. So we're looking at this as a cash flow problem, as distinct from a profitability problem. The long-term sustainability is not in question. So it's really about getting over the next 12 months with as little damage as possible, and make sure that everyone's reputation, track record, and stress levels are kept are managed. So what options have we available to farmers? There's a number of different options. So some farmers in the last 12 months would have spent money on the farm in various capital projects. If they want a cash injection, they can refinance that. That's the first option. Second option, and you might have seen it in national press there recently, was a farmer credit line. So it's a working capital facility. It's 3.57% interest. So it's really good rate of interest. It's designed really to help farmers buy their products in a timely manner, pay their merchants, get good cash prices for it, as long as they clear their facilities within the year. So they basically have to show 30 days credit on that. And the final offer, you mentioned unsecured finance. Typically banks will lend to farmers unsecured up to 100,000 is normally the figure with different banks, and we're no different. But there's actually a very timely product that's after coming out at the moment called the Brexit Impact Loan Scheme. So we're partnering with the SPCI, and all the pillar banks are doing this as well, whereby if you can get finance from anything from 25,000 to 1.5 million unsecured. The rates and the terms and conditions are really attractive. It can be used for working capital or for investment. It can be financed over 1 year to 6 years. The interest rate is anything from 2.5% to 3.5%, depending on how much you're borrowing. And it's really, I suppose, the usual terms and conditions apply. You're going to have to show repayment capacity. But you asked the question, what happens if a customer is looking for finance and they're new to the bank? You know, it's whether they're AIB or Bank of Ireland, the terms and conditions aren't much different. You have to show repayment capacity. So if you're an AIB customer, you show us the trading accounts. You show us 3 years trading accounts and a list of your commitments. If you finance and leasing commitments, etc., with other banks or other leasing companies, show us that. If you're with Bank of Ireland or Ulster Bank, or some of the other providers, what we would need is maybe 6 months, 6 months bank statements. And depending on the complexity of the case, and this won't be required in a lot of cases, but depending on the complexity of the case, we may require cash flows as well. But I think the main message, James, and we'll wrap this up, but the main message from your early speaker as well as myself is come to us early and talk to us so that we can put provisions in place to make sure that you're covered.
Yeah, thanks, Liam. Well, I would say, I suppose, you know, we're at the start of the year now before a major spend is done. So sitting down and working out a crop plan for the year is really important. Those that have winter crops in the ground, they have some of their colours nailed to the mast, but they haven't got the major spend done yet. So it's about planning and writing the cash flow. And if people sit down to write a cash flow, you mentioned that 2021 was a good year. There might be a top up in tax due next October. So don't forget that when you're writing the cash flow. And I suppose it's about planning the crops, dealing with the agronomists, so talking to John and talking to yourselves. So I suppose this conference or webinar is at the right time of the year to help guys, you know, get 2022 right. We don't know what 2023 is going to bring. We know there'll be a new cap. There could be a new normal in terms of input prices because things generally don't go down. So I suppose this is a shock to get us organized for a future, and hopefully, you know, people will take heed in the messages and go and talk to you so that we have a successful and keep tillage going, because it's important to the Irish economy. So thanks for your time, Liam and John, this morning, and back over to you, Shay.
Okay, thanks for that, lads. It was getting into a very interesting discussion there. Well, we're waiting for John just to come in there now. I think there's a bit of a technical difficulty on the line. But while John is coming in, Liam, if I can go to you first. I mean, you mentioned there about bringing in cash flows and projections and all this sort of carry on. So for farmers out there at the moment, right, and he's looking to get extra credit. I mean, this is extra credit above what would have been there before. What steps should they take before they come into you at all?
Yeah, I suppose, thanks, Shay. I suppose, first of all, you have to size the problem. So the best way of doing that is if you can do some form of a cash flow, and that'll give you a sense of how much of a gap there needs to be filled. So I think the figure that was thrown out there earlier on the VT was roughly 160 euros an acre, or 40,000 euros on a 100 hectare farm. So if it varies dramatically from that, you're going to need to sort of quantify it, and how you do that best is by putting together a cash flow, and whether that's with the help of your accountant, with the help of your consultant, whether it's Chagas or others, or even your bank, we'll all try maybe come up together with realistic figures that work.
Yeah, and I suppose just to make the point too, a lot of people have been asking me over the last week when are our Chagas cost and returns booklets going to come out, which a lot of people use to create those budgets and cash flows. Hopefully we should have them on the streets next week. They're in final editing position or stage at the moment, so we should have them in next week. And again, Liam, just in terms of, you mentioned a couple of different products there. So you mentioned, and it's a quite pertinent our observation, that this is a cash flow problem. It's not a profitability problem. So in that scenario where a guy's just looking to get out for the 12 months, are you looking at those 12-month products, that 3.5 or 3.57% products type situation, rather than putting debt over a longer time, if you like?
Yeah. I think putting working capital facilities over maybe 6 years in a lot of cases isn't the correct course of action, because you're just kicking the can down the road. So it's really on a case-by-case basis. Like a lot of our tillage farmers will have invested fairly, heavily in the last few months and maybe years in their farm, and they would have done it from their own resources. There is this opportunity now maybe to re-inject or to put some money back into the business, get some cash back, at a cheap rate of finance, and that's where the Brexit Impact Loan Scheme comes in. But if this is just really a temporary situation brought on predominantly by fertiliser price rises, the farmer credit line is very hard to beat, because as we said earlier, output prices at harvest are going to be, look to be quite good, look to be quite strong. So this should be a temporary situation. We should be able to wash our faces, and the credit line coming in at 3.57% is very, very attractive. And I know from talking to John and other merchants that cash is king. If you can pay for your products up front, be it as expensive as they are at the moment, If you have, the pen is mightier than the sword, as the saying goes. If you can write a check, you're more likely to get good prices.
Exactly. John, if I can turn to you then, there's a couple of questions coming in here specifically for yourself. Firstly, I suppose you mentioned there about gas prices and the link between nitrogen and gas prices. Was there a study to say that, the question coming in here, was there a study to say that nitrogen was not linked to gas prices, or is there a direct impact?
A very direct impact for European production. All European production is based on gas prices, and no doubt, and we saw it last autumn, as I said, whereby the gas price went up, the fertilizer factories just closed. They closed down production, and that can happen again. Yeah.
Yeah, and another question coming in here, John, as well. There was quite a few deals done before Christmas. Is there any idea of the amount of fertilizer that's actually on farm at the moment? Is it higher or lower than normal, would you think?
Certainly there are deals done, but there's very little fertilizer on farm. And that's our worry. That's our big worry. Again, even if farmers, naturally, if they have money or they can afford to buy it, we'll certainly be very interested to talk to them. But certainly one way or the other, we need them to come talk to us in relation to what their requirements is, what products, because as I outlined, there is a real worry here that when fertilizer demand comes on in the later part of the year, that it may not be available.
Yeah, and you mentioned that earlier on, John, and it's a question, I suppose, that comes up on the back of that, in terms of if people are looking for the common products will probably be most available, but the specialty products may not be available. Would that be fair to say?
Not altogether, because we just don't know.
Right.
So, okay. Like suppose nitrogen, we can't get nitrogen, or we can't get nitrogen with sulfur, we can't get a CCF, or indeed that the potash piece becomes a bigger problem. So we just don't know. That's the biggest problem here. We don't know. We haven't been, we have never been in this space before. So, it's to err on the side of caution if we can.
And I don't know how your geopolitical sort of information is, but what's the Ukraine situation going to do to it, do you think?
Yeah, well, we're all looking at that every day to see have they invaded yet? Because if they do, well, then that's a huge conundrum. Yeah, so
it's a game changer. Yeah. James, just turning to you then, I suppose, from the point of view we have both the financial sector in terms of Liam, and we have the merchant level with John. Have you any advice in terms of what guys should be doing in terms of finance? That should be balancing, should it be going all one direction or all the other direction, or should it be having it, or what way should it be going, do you think?
Well, I suppose the first thing is figuring out how much credit you need, and then where is the best place to go and get it. So I mean, like, it's down to cost of credit. And I mean, if your local merchant is going to give you a good deal, if you're going to forward sell some of your grain, price is high at the moment, maybe it's a good time to lock in some of that and do a deal. Banks are in the business of making money, so from lending money. So I mean, it's all about where you can get the best deal. Where are you now? I suppose, how much credit have you available? Working out what do you need to get you through the season. So it's about writing a cash flow, figuring out the figure, and then working on a plan from there. And if you're not happy with the figure that you need, well, can you change your crop and choice? Because we're early in the season now and not all the crops are in the ground, or maybe you haven't all the seed bought yet. So maybe you can tweak your rotation or tweak your cropping so you're not investing as much money. So, because some people carry high levels of debt and don't think about it, and others, carry a small bit and they're very worried. So it's about your own personal, how you react to the level of debt you're carrying and the risk of the business. So that's an important thing to also consider.
Yeah, and you make a very good point there about your crop choice. I mean, looking at the figures from the cost and returns booklet that we're doing at the moment, there's significant difference between, say, likes of cost of growing something like beans versus, say, something like spring wheat or spring barley or something like that. So there's definitely savings there. John, a final question to you in this section, if you like. What's the availability of protected urea? Don mentioned that he's looking at using protected urea this year.
Yeah.
Any comments on it?
Yeah, so we have protected urea. So anyone, urea is available at present. For how long, we don't know. And then protected urea is also available. So we have both. And once people order it and give us a couple of days notice, we'll get them protected urea. No issue whatsoever with our supply.
Okay. Well, look at folks. Thanks for your time. Thanks to all our panelists this morning. We're slightly over time, so we're going to have to wrap it up there. Just again, on behalf of all the audience, that thank you for taking your time, for sharing your ideas and opinions and advice with us. As I said earlier on, this is the second in a series of webinars that we're running over the next coming weeks. So I'd hope that next week we'll have the second part of the crops or the National Tillage Conference. So I hope you all can tune into that, because again, there's some very interesting information to be garnered from that. So again, on your behalf, thank you very much, guys, for listening. Thanks for the contributors and the panelists for coming on board. And we'll see you all again, please God, next week.
Thank you.
All right, thanks, Shep.